So, welcome to this class. The class about VAT. So, VAT. So, the class about value added tax. Value added tax. So, value added tax. We shall give notes on that. Then we do a question. So, we shall start with the definition of VAT. We start with the definition of VAT, and we say VAT is a consumption tax. So, it refers to consumption tax levied on the value added. Levied on the value added. Levied on the value added to goods. To goods and services at each stage. At each stage. So at each stage of distribution. And production. So that's the definition of VAT. So it is the tax which is levied or which is subjected to the value of goods and services at each level of production or distribution. We can talk about some other definition like input VAT. Input VAT, and we say this is VAT a registered business pay. This is the VAT. This is the VAT a registered business. So this is the VAT a registered business pays on purchase of goods and service. On purchase of goods and services. Goods and service uh, to make taxable supplies. To make taxable supplies. Taxable supplies. So it can be claimable. So it is claimable. Stroke deductible. Stroke deductible against input VAT. It is claimable against the input VAT. Input VAT. We can talk about the output VAT. Output VAT, and we say VAT a business charge. A business charge on now opposite of purchase. So opposite on each sales. On each sales of goods and service. Of goods and services. So VAT business charge on each sales. Then we have deductible VAT. We can talk about the deductible VAT. And what is the deductible VAT? Supposed to be deductible input VAT. Input VAT. So what is it? And we say it is a portion of input VAT. It is the portion of input VAT. So it's a portion of input VAT that the business is legally restricted. That business is legally uh, restrictive. So it's a portion of input VAT that the business is legally restricted on output VAT. On output VAT. Then you can also add and say it occurs where input tax relating to goods sold relating to goods sold as exempt could not be directly be identified be identified be identified uh, so that's all. So it occurs where the input tax or the input VAT related to goods sold as an exempt sale could not be directly be identified uh, as input VAT. Uh, Hence restricted. So in that case, if you find a question and they say that the exempt sales could not be identified with the input VAT, then it means that the sales are restricted, and therefore we need to compute the deductible input VAT. We need to compute the deductible input VAT. Let's talk about tax period. And we say it refers to a specific duration. Refers to a specific duration. Usually monthly. During which VAT return must be filed. VAT return must be filed. That one is okay. And paid. So you file and you pay. Must be filed and paid. Return is due on, so, and then we know return is due on 20th of the following month. So return is due on 20th of the following month. Let us talk about taxable supply. And we say sales of goods and service refers to sale of goods and services. Liable to VAT. So sales of goods and services which are liable to VAT. And that one is fine. And then we can also talk about time of supply. Time of supply, and we say refers to the date to which VAT becomes due. Refers to the date which VAT becomes due. We say it is the earliest of it is the earliest of number one, date when goods are delivered. Number B, date when service are performed. Date when service is performed. Number C, date on which invoice of supply is issued. Number D, date the certificate by architecture or surveyor is issued. Maybe I said the earliest, then ya mwisho, date in which the payment is made. Date on which the payment is made. And then to bracket either full or partial. Either full or partial. Either full or partial. So that's what we need to know. So I can give a format. Let's see if we can give the format of VAT on the other side. So tunaanza na output VAT. So this is the format. Sales, which is standard. Unaweka hapo VAT yake. You have sales exempt, which is zero rated, or you have sales export, which is 0. Then you have debit note issued kama iko, credit note issued. So credit note is supposed to reduce our output VAT. Then you have bad debt written off. Also, it's supposed to reduce our output VAT. I have talked about input VAT. So, for example, purchases, which is local. Import, VAT amount. Services, debit note received, and then credit note received. Return outwards. Supposed to reduce. So return outwards supposed to reduce our output to VAT. Then expenses. So expenses zinaweza kuwa ni mingi, so nimeweka tu hivyo direct. Then get our input VAT. So that's the general format. So that is the general format that we are going to use. So that's the general format that we are going to use to compute the VAT in that manner. So let us do the first question is December 2024. Question number 2C, December 2024. Question number 2C, December 2024. Question number 2C. So December 2024, question number 2C. So the important thing that you check if you have deductible VAT. Now in this question, if you read everything, we don't have something like to do with deductible VAT, and therefore we can start with the first one, output VAT. So we start with output VAT, and the first one will be purchased material from Dubai of 2981,200 inclusive of import of 25% and a VAT rate of 16%. So we have something to do with purchases. So 2989,200. So 2989,200. Now that is purchase of raw material. Our rebate is inclusive of import duty of 25% and the VAT at a rate of 16%. So it is inclusive. So 2981. Tunasema 2981 200. So remember the import duty, we are supposed to tax the import duty at 16%. Now it is inclusive already, so that one is okay. So we just need to find the value of VAT. So this figure 2981 200 represent 116. We need to get the VAT. VAT is 16%. So what will be the value? So times 16 over 116, so that we get our VAT. So 2981 200 times 16 divided by the 116. So for 11 200. So for 11 200. Now information number 2, purchase goods from suppliers of 3840 net VAT, out of which 20 were unregistered. So 20 were unregistered. So remember, purchases for unregistered is not vatable. So you need to know that purchases for unregistered is not vatable. So the only thing that is vatable is purchases for registered members, or the person who have registered VAT is vatable. So out of 20%, 80 is vatable. So purchases, purchases. Now purchases. So purchases tunasema ni ngapi? Okay, before we continue, so we have sales there, or pale information about we have sales. Tutarudi kwa sales baadaye because sales relates to output. Hata hapa nimewadanganya, supposed to be input VAT. So information number 1, we also have sales. The sales hiyo itakuwa ni baadaye, so that one will be later for the same month. Now hiyo 4785, that will be our output VAT, itakuwa baadaye. So let's go 3840. So tunajua ni 3840. So tuseme hapa 3840,000. Now remember, they have told us that 20% are from unregistered. So kumaanisha we only need 80%. 80 over 100. Because 80 over 100 is for the registered. Then this amount, was it inclusive of VAT? it was net VAT, kumaanisha the VAT was not included. So if the VAT was not included, it means the value of VAT will be 16 over 100 over 100. Remember the rate is 16%. So the VAT is not included. So you get the VAT direct. So 3840,000 times 80 over 100 times 16 over 100. 491,520. 491,520. Next, information number 3. Sorry, information number 3 or what? Yes, number 4. Number 3. Ameruka na information number 2. Haina. Information number 2 ni ile ya sales pale juu. Paid an audit service amount to 90. So audit service, that is a payment. Unaweka side. Payment is input. Audit payment, how much? To 290,000. So remember, all the transactions were inclusive of VAT. So you hajatuambia anything, we know they were all inclusive of VAT. So VAT is included inside. So the 16 over 116. Ama unakuja unasema hapa 290 represent 116. What about 16? Direct. Unaweka hapo. So 290 times 16 over 116, which is 40,000. Aya, tukitoka kwa audit, tunaenda kwa October 12. Sold goods to a client in Rwanda. So that's a sales outside the country. So export, itakuja kuweka hapa baadaye, which is zero rated. Hiyo ni baadaye. Aya. Next we have actually tungefanyia hata hapa tu bado. Tungekuja tuweke pia input VAT hapa. Input VAT. Ndio tumalizane nayo. We have the first sales. Information number October 1st. 4785. 4785,000 times 16 over 116. Itakuja ngapi? 4785,000 times 16 over 116. 660,000. Then we have another sales. Ilikuwa information number 12. Sales to Rwanda. To Rwanda, we know that's outside the country. That is zero rated. So it's zero outside Kenya. Then you sold goods on credit to Mombasa at 835. The member paid 320. So sales to Mombasa, we pick the whole amount, the earliest. So remember the tax of supply is the earliest off. So the earliest is the time of credit. 835,200. 835,200. 16 over 116. So 835,200 times 16 over 116. 115,200. 115,200. Aya. We have number 20. Dealer is issued a credit note. Dealer issued a credit note to client in Rwanda for defective good. So credit note issued. So credit note issued. So credit note issued. Now remember it was zero rated because it was for Rwanda. So itakuwa ni zero. So credit note issued. Then October 24. Purchase of computer for resale at a price of 20 exclusive of VAT. Their purchase interest was 92,000. So we have purchases for 20,000 times 16 over 116. So for 20,000 times 16 over 116, which is 57. Oh, it was inclusive or what? Exclusive. So times divide by, so hapa inafaa kwa 100. Exclusive, sorry. 67,200. 67,200. So that is purchases. Next, the director company took goods worth of 160 for personal use and donated worth to 40 to Neema Children's Home. The policy of the company not to charge VAT, so to hapo, so they do not charge VAT. A customer who was declared bankrupt paid the debt of amounting 100,000. So debt recovered. So kama ni debt recovered, kumaanisha it will increase our sales. So debt recovered, ilikuwa ni 100,000. So debt recovered ilikuwa ngapi? So times 16, so 16 over 116. Nenda basi. So itakuja ngapi? So 100,000 times 16 over 116, which is 13,793. 13,793. Information number 29. Number 29 tuambia purchase goods for cash. So we have purchases 1240,000 times 16 over 116. So in tujaambiwa anything, tunajua it is inclusive. So 1240,000 times 16 over 116, which is 171,034. 034. That one is okay. Then we have another one. Which is October. Bottled water is vatable. Bottled water is taxable. Now, ukiona piped water, it is not vatable. So this one is vatable. 30,000 times 16 over 116. Then we have rent for business. So rent is vatable these days. 48,000 times 16 over 116. Then we have the last one, private parking for director. Private parking, if it is the amount is directed to county government, is not vatable. But if it is not, then it will be vatable. So private parking. So tuandika private parking. And then you remember, you put a note that private parking is not through. Private parking is done by private company. But kama inafanywa na wasingishu, by county government. So if it is being done by county government, it is not vatable. But if it is private company, then vatable. So we are going to assume private company, 30,000 times 16 over 116. So I think tumemaliza kila kitu. Now we input the figures. So 30,000 times 16 over 116. This one is 4,138. So in a round off. Then we have 48,000, which is 66,620 point what? I'm putting the full figure 6621. Then 30,000 itakuwa ni 4138. So we add them together, get the output VAT. You also add this one together, you get the input VAT. So add them together. So VAT payable. Stock refundable. Is given us the output VAT minus input VAT. So let us see if it is payable or refundable. So 788 993 minus 1195 851. So it's a negative figure, meaning it is refundable. You're not supposed to pay VAT. So Kera is supposed to refund you 1195 851. So we have a refundable 406 858. So this is VAT refundable. You are not supposed to pay the VAT, but you are supposed to be refunded the amount by KRA. So you are supposed to be refunded the amount by KRA. So that's how you are supposed to do such kind of a question. December 2024, question number 2C. Let's go do another one. Let's go to another question. Let us move to another question. So for the question of December 2024, remember we did not deduct, so to re-add the credit note issued. So kindly correct that one. So the credit note issued was supposed to be deducted in our previous question to Mefanya. So please kindly correct that one. So you make sure you deduct. So mimi nili-add badala ya kudeduct. Now for bad debt nili-add because it was a recovered amount. So that one was a recovered amount, so I added it. So let's go to this one. August 2024, question number 2C. August 2024, question number 2C. So we can start with our output, VAT. We can start with output, VAT. Start with output, VAT. That one is fine. So the first information is about purchase and it is local. So local is vatable. So purchases, and to bracket it is local. So how much is it? Now, pale chini information number 4, the transactions are inclusive. They are all inclusive. So 40,000 times 16 over 116. If it's inclusive, so 40 times 16 over 116, which is 640,000. This is information about output. Next, purchase of a computer. So we can talk about computer purchase. Computer purchase. Now, computer purchase 162,400. 400 times 16 over 116. So 162,400 times 16 over 116, which is 22,400. Return outward. Now return outward is supposed to reduce our mimi niko zangu. This is tunafanya supposed to be input. Supposed to be input VAT. Supposed to be what? Input VAT. Sijui mbona nashinda nikifanya that mistake, but it is fine. So I think iko sawa. The question is for August, actually, after August 2024. It's fine. Now to the left, so it's supposed to be input VAT. So return outward is supposed to reduce this account. Return outwards. Now our return outwards, and tuambia ni ngapi? 139 200 times 16 over 116. So 139 200 times 16 over 116. 19,200. Remember, it's supposed to reduce this account. 19,200. We have legal fee. It's also a payment. Legal fee. Legal fee 62,640 times 16 over 116. It's also a payment. So payment and purchases are input. So 62,640 times 16 over 116. 8640. Yeah. We have import kama kawaida. Import you check additional information. Now import wametuambia ni 300,000 but we check additional information 300,000 but be sure to check additional information. Now additional information number 1, during the month the import duty was 20% on cost, so we need to add the 20%, so itakuwa ni 120 over 100 times 16%. Now the import duty is not inclusive of VAT in any manner, so unaweka direct, so 120 over 100 times 16 itakuwa ni 57,600. We have salaries. Salaries are not vatable, so salaries are not vatable. You ignore. Salaries are not vatable. We have sales. These are, we can do that one now. Chini yake output VAT. I hope itatosha. Output VAT. So we have sales and local. Sales local wametuambia ni 59,16,000. 59,16,000 times 16 over 116. That one is vatable. 59,16,000 times 16 over 116. 816,000. Kutoka kwa hiyo sales tunaenda kwa export sales. So export sales. So we know that one is exempt. It's zero rated, I mean. Then you have exempt sales. Exempt sales. Now this one is zero rated. Yeah. Printing and stationery is a payment. So ndarudia blue. So uko juu. Printing and stationery. Printing and stationery. Printing and stationery 27,840. So printing, nataka to printing 27,840 times 16 over 116. They said that they were inclusive. 27,840 times 16 over 116, which is at 840. Yeah. Electricity is also vatable. Electricity is vatable. 53,940 times 16 over 116. 53,940. 16 over 116. 7440. But there's a very important information pale chini. Information number 2. The debtors of value was declared bankrupt. So that one will reduce our debt. So bad debt written off. Tunasema bad debt written off ni ngapi? Bad debt written off ni 121,800. So 121,800. So remember, every item is inclusive of VAT. So 121,800 times 16 over 116. 16,800. So we get input VAT and we get output VAT. So let us add them together. So 640,000 plus 22,400 minus 19,200 plus 86,40, 57,600, 38,40 plus 74,40. So 720. 720. Hayo mwingine 816,000 plus 16,800, which is 832,800. Now, but remember, our VAT in this case haitakuwa hii formula. Remember our formula of VAT is equal to output VAT minus input VAT. So remember that's the formula. Now in this case, that will not be the formula. No, in this case, that will not be the formula. Reason why? Because we have been told somewhere, information number 3, that the goods were restricted. So kuna mahali ametuambia that the goods were restricted. So So let's compute. So VAT in case of restriction, VAT in case of restriction, and remember restriction mostly is on exempt sales. Remember it is mostly on the exempt sales. So you need to know that one is on exempt exempt sales. Now remember this was a bad debt. This was bad debt we are supposed to deduct. So kumaanisha ifiga yetu hapa sio hiyo. So 816,000 minus 16,800, which is 799,200. 799,200. Now let me give you the formula in case you have. So in any exam, you check if you have that information. Number 3, the input tax relating to goods sold as exempt could not be identified, and it was found appropriate to restrict the deductible VAT. Now, if you find such kind of information, this is what you need to know. So you need to compute what we call the deductible input VAT, which is equals to total input VAT, you multiply it with the total vatable supply, divide by total supplies. So we have for total input VAT we have it. Ndio hiyo hapo 720. So we need to find total supplies first. Total supplies. In this case, we shall compare the three: the standard rate, and then we compare with zero rated and exempt. So let's start with the standard rate. Now, standard rate, the figure was 59,16,000, but remember to rest your VAT. So remember to rest the VAT value. So 5960, remember to rest your VAT as 816,000. So we need to put without VAT. I have zero rated. Now zero rated, it was 600,000. So zero rated, it requires 600,000. I think that is in the question. Zero rated, let me confirm. Yes, and then we have exempt 1840. Now exempt was 1840,000. So that you get the total supplies. Hii itakuwa ngapi? So 5916 minus 816 is 55,100,000 plus 600 plus 1840, which is 7540,000. Aya, ukishapata hiyo, I think we need to get the total vatable value. We need to get total vatable value. Na total vatable value tu zinakuanga mbili. There's only two of them. The standard na zero rated. The standard and zero rated, ama? Yes, so standard and zero rated. So you pick the standard rate, which is 51,000,000 with the zero rated 600,000. Inapatia total vatable value 57,000,000. So we can get now our deductible input VAT. Deductible input VAT div. Deductible input VAT. Total input 720 times We take variable 5700,000 divided by the 7540,000. So once you get that one, you shall get the deductible input to VAT. So itakuwa ni 5700,000 divided by 7540,000 times 720. So mimi napata ni 544,841 or 841. Now you can get out VAT, payable or refundable. It can be payable or refundable. So unachukua output VAT which is 799,200 ndio hii hapa 799 output VAT. So 799,200, so you less the deductible 544,841. So it is payable. So that will be the VAT payable because it is positive. They are supposed to pay 799,200 minus 544,841. 254,359. So that's the value of the VAT payable. That's the value of the VAT payable. That's the value of the VAT payable. Value of the VAT payable. So let us do another one. So at least we'll do an extra 2 questions. So we go to April 2024, question number 2C. April 2024, question number 2C. So we do the question. So April 2024. Question number 2C. So hii imeisha ink. Let's try another one. So additional information, when it is additional information in most cases. So information number 1, the VAT account established that the standard rate purchase were understated by 20%. So that one, the customer, we need to consider it later. And then what else do we need to consider? Sales at standard value included value of 270 sold to our creditors who are declared bankrupt. You have to consider. A customer returned goods at a standard rate of, so that one is a return. Then a credit note was issued. So we have a credit note in that case. Credit note issued, supposed to reduce our output VAT. Then we have an accountant established an invoice of 480 from foreign suppliers was not recorded. The import duty was 20%. So you need to consider that one as sales. So we shall consider that one as the sales. Yeah. And then the last one, repair for furniture, local company are not registered, so that one not vatable. Transactions are inclusive of VAT, so all the transactions are inclusive of VAT. So we start with the output. VAT. VAT. So huko juu tukianza wanasema sales standard rate. Tunaanza na sales which is the standard rate. Ni ngapi? 61,69,997. 61,99. 61,99,997 times 16 over 116 because it is inclusive. So 61,99,997 times 16 divided by 116. 855,175. 855,175. Information number 2, export to Egypt. So we have sales which are export. Sales export, they are zero rated. So sales export zero rated. We have purchases as an input VAT. sote niweke hapa chini yake. So we do it tukisonga. So we have purchases 4 million. So 1, 2, 3, 4, 5, 6 times 16 over 116, which is 551,724. Purchases of oil for van. We have another purchase of oil. Ni 360,500 times 16 over 116. So 360,500 times 16 over 116, which is 49,724. Repair of furniture. Pale chini tuambia repair of furniture for local carpenter who is not registered. So for purchases anything which is not registered or payment, we not include it. Audit fee 160,000. Audit fee 160,000 or tuambia ni inclusive. So tuambia transaction were inclusive. So 160,000 times 16 over 116, which is 22,069. Tunaona kwa audit fee tunaenda kwa salary and wages. Salary and wages are not vatable, we ignore. Purchase of stationery 58,000. So stationery 68,000 times 16 over 116. So 68,000 times 16 over 116, which is 9,379. Stationery. Electricity bill, even if it is not paid, tunaweka. Electricity bill 56,400. So 56,400 times 16 over 116, 7,779. So the earliest of legal fee also. Legal fees. Now legal fees 14,600 is an expense, which is vatable. So 48,600 times 16 over 116, 6703. Purchases from traders who is not registered 580. We ignore that one. That one is not registered. Then you have zero rated sales. Zero rated sales is 0. Information number 1. The VAT established that standard rate were undercasted. The standard rates were undercasted by some amount. So hii itakuwaje? So undercasted sales, sales. So undercasted purchases itakuwa hapa. Undercasted purchases. So we need to do a working for the undercasted purchases. So undercasted purchases. So we need to do a working. Now tukienda kwa swali yetu, we know that our purchases ilikuwa ngapi? Our purchases was 4 million. This one, it was 4 million. Then it was undercasted by how many percent? It was undercasted by, so the VAT account established that the purchases were undercasted by 20%. Kumaanisha this figure, this 4 million represent 80%. sivyo? And remember we needed the 100%. So remember this figure is supposed to be 100%, but we're having 80%. So how much are we remaining to go back to 100%? So 20%. So this 20% is also variable. So 20 over 80 times 16% times 16%. Then we shall get the VAT on the undercasted value. We shall get the VAT on the undercasted value. Actually, all this amount were inclusive of VAT. They were inclusive, so ni 116. 116. So itakuwa ni ngapi? Ni 4 million times 20 over 80 times 16 over 116. So this one is 137, 931. So 137, 931. I think tumemaliza. Let me see. Kwa tumefika hapo. Tumemaliza number 2. Sales at standard rate included goods of 278,400 sold on credit whose value were declared bankrupt. So hiyo tunaandika hapa bad debt written off. So bad debt written off 278,400 and 16 over 116. So hiyo tunaweka hivyo direct. So 278,400 times 16 over 116. 38,400. 38,400. What is this remaining? A customer returned goods, and then the company issue a credit note. So credit note issued. So credit note issued. Credit note issued 58,000 times 16 over 116. So credit note issued the 58,000. So 58,000 times 16 over 116. 80,000. 80,000. Credit surprise issue a debit note. So debit note issued 580. Debit note issued. Actually, credit note issued iko juu. Sorry, supposed to be on this side. So credit note issued 80,000. Haiko huku chini. Aya. Then we have a debit note. Where is it? Debit note issued now. Debit note issued also. So debit note issued. So debit note issued tukiangalia pale ni ngapi? 580,000. 580,000 times 16 over 116. So 580,000 times 16 over 116. 80,000. So debit note issued. We add it. Aya. We have something to do with the accountant established an invoice of 480 from foreign supplier not received. So sales. So sales. This is an import. Then that will be zero rated. So actually this one will be from itakuwa import. Import. Na hiyo import already haina, ametuambia pale import duty was 20%. So kumaanisha we need to consider that one as for 80,000 times 120 over 100 times 16 over 100. Inafaa ikuwe hivyo because it's an import na iko na import duty. So kila iko tuna import duty, hiyo ndio the formula. Unachukua times the import duty times the VAT 92 and 60. So you add it together, utapata output VAT. Then you add together, utapata input VAT. Then ukumbuke now to get the VAT payable, stock refundable, unachukua output VAT minus input VAT. So output VAT minus input VAT. So I think that one will that marks the end of our class. So output VAT we get in 1057,735 minus 785,309. So you can get the VAT. You can get out the VAT value. So let's see. So 1057,735 minus answer, which is 272,426. 272,426. 272,426. I think that one will be, it will be best if we end the class at that point. So you have a lively night.